Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey everybody.
Hey Lauren, I'd like to read the Sunday business section in the Seattle Times because I'd like to see what our clients are reading, if they're reading anything at all,
right?
And on the Sunday paper, and I think that's always an interesting section to read. And this is dated September 30th, a few weeks ago, and it was interesting because although we've had really good returns in the stock market, different indexes across the globe,
right?
They talked about how, again, the retail mutual funds fell 1.25 billion of money being withdrawn out, and actually 10 billion went into institutional money market accounts, and so now we have for total money market assets have now risen to $2.576 trillion.
Making 0%.
Yeah, 0% roughly. So then I go over just a little bit farther to the right of the column, and there's a great column by Scott Burns, and he's talking about the byline is eating poorly on CD's interests.
Oh, okay.
Okay, and he did an interesting analysis. He said that he looked at the U.S. Department of Agriculture figure for a family of 2 over the age of 50, what it might take to eat going to the grocery store on a weekly basis.
Oh, okay.
And he determined that if you wanted to be really well fed, the Department of Agriculture said that you can eat well for $158 a week.
Okay.
At the grocery store. And if you could pinch and eat more moderately, you could squeeze it down to $106.30 a week. This is according to the Department of Agriculture.
Okay.
Now, I don't know, I think that's going to probably go up because I don't know if you've been in the grocery store lately, but prices are going up.
I think it's higher in cities.
Right. So this is national, by the way.
Right, yeah.
Now we're going to give them the benefit of the doubt and say, okay, you can somehow eat for $106 a week at the grocery store. Okay.
Right.
Then he said, let's take so what do you need in CD savings to afford that? And what he determined was is that because the average 1-year CD rate was 0.19%, so let's write out 0.19%. This is where the math comes in.
All right.
0.19%. If you divided, just to live on interest only, if you divided the weekly cost of $106 by 0.19, it would take 55,000 of savings per week.
Per week.
To get that, to just live off the interest only at $306.
Okay.
So if you multiply that by a year, a number of weeks in a year, it comes out to 2,909,000.
Okay.
So let's write down 2.9 million. I guess.
2.9 million. Okay.
So for an annual to live on to afford groceries on interest only, you need to have 2.9 million in savings. Is the gist of this article. Okay?
This is penny pinching groceries.
Right. So it's not funny.
Right.
But okay. So then he went back to 2001, and based on the interest rates in those days, and CDs were earning about 5% per year.
That seems so long ago.
Yeah, you would only need 76,000 to have equivalent purchasing power in 2001
for the whole year.
Yeah.
Fascinating.
So there's a problem.
Yeah.
People that are living on CD interest only are obviously going to have to dip into principal to make ends meet. So what do you think some solutions to look at might be?
Diversify.
Diversify.
Something more than CDs, something more than money markets.
I mean, the dividend yield on a lot of the indexes that we work with are much higher than 0.919%. I think our international fund has a 2.1% dividend yield. So that's a solution. Doesn't mean put all your money in the stock market. Diversify, as Lauren said.
Yeah.
My takeaway is that people look at the fact that there's trillions of dollars in money market. People have a very large fear of equity markets, which is true. So, but my question is, and this is the takeaway at the end of this episode, would this be a bigger fear? To make ends meet, that you need to have, you're dipping into principal to make ends meet. So, thank you for watching this episode of Erickson TV. If you're worried about your financial future and being able to afford your grocery bill, please talk to myself or Lauren about how to diversify your portfolio. Thank you.
See you next time.
Bye now.